You've heard cash is king, and you know it is paramount for closing fast and negotiating big discounts in real estate. But without strong credit, you'll pay higher rates, you'll drain your cash reserve, and you won't be able to scale. Therefore, I'm sitting down with attorney and CEO Bob Willis to expose the truth about credit repair. We'll talk about what works, what doesn't work, and how to legally clean up your credit to unlock real financial power. Here's the thing. Many people never start investing because they lack credit. Many investors become property rich and cash poor due to lack of credit. Arguably, to maximize your potential in real estate, you need credit. Understanding how to leverage credit is what separates people who hustle deal to deal from those who build scalable business and sustainable wealth. Understanding how to leverage credit is what separates one property owner from portfolio builder. I show my investor client how to use credit in their rental business to motivate tenants to pay on time. Plus, I teach them how to pair it with lease option so their rental buyers actually have a shot at buying the property. No more hassle over price, negotiating back and forth. Really, there's no negotiation. You call the shots. You set the price. Period. By the end of this video, you'll know exactly how to use credit to boost your access to capital and grow your real estate business. Welcome to the show where we talk real estate, real stories, and real strategies to help you improve the value of your investment properties. I am your host, Gladimir Lobo, real estate investor and broker with over 20 years in the game. Who is Bob Willis and what is your background?
The relevant answer for the purpose of our conversation is I am an attorney. I had a consumer litigation practice for several years where I would sue debt collectors, I would sue the credit bureaus. And that's really where I learned about credit. I deposed a number of people from a number of different bureaus and was able, through those depositions, to crawl inside that black box that is credit and discover what it is and how it works, and also importantly, how it doesn't work. So that's my background as far as my law practice goes. And then 18 years ago, with a business partner of mine, we started the company called Credit Repair Resources. And that's where I'm currently the CEO and the general counsel for.
Okay. So what does the credit repair agency does exactly?
So we help consumer credit, and it's only consumer credit, not business credit, but we help consumers fix their credit report. And by fix, in a very legal sense, we're licensed, bonded, and insured. I'm a licensed attorney in the state of Ohio, and I'm not going to put that license at risk. In a very legal fashion, we help people clean up errors and mistakes and inaccurate items from their credit report.
Okay. So you did a lot of litigations with the credit repair company. Anything that transpired from your experience in interacting with them?
It was interesting to see how it's a very big machine. And a lot of times the left hand doesn't know what the right hand is doing in the bureaus. A lot of times things are sent offshore. If English is not somebody's primary language and I'm making a dispute in English, nuance can be lost in the translation. And that was one of my cases. The person in the Philippines that was working for the bureau misunderstood the nature of the dispute and denied the dispute. When we were deposing a person from that company, a higher up from the company, they're like, no, this dispute should have been processed properly and that item should have been removed. And again, computers don't understand nuance of the English language. And so one of my phrases is this: friends don't let friends dispute online. The bureaus all have these portals where you can go online and dispute your credit, but that's computers talking to computers. Two things happen when you do that. Number two, you waive all kinds of consumer rights. You waive your right to sue them. You waive your right to have them pay your attorney's fees if you're correct in that lawsuit. So that's why I say friends don't let friends dispute online.
Okay. So does it mean that you have leverage in a way, accessing things that normally you would not have access to if you're disputing something directly through one of the major credit bureaus?
A lot of credit repair companies do disputes through the computer. We
Okay.
take a more personal approach. Everything from we have case managers that will actually talk to our clients over the phone and email and text them and all that. But also, when we do disputes, we do them via regular mail. We found those are much more effective to do
Okay.
regular mail disputes. And additionally, that way you're not waiving all kinds of rights that you would have as a consumer.
In essence, your company does credit repairs. For the folks who don't know, what is credit repair and why do we need it?
Credit repair is basically an auditing process of a consumer credit report. And to understand that, you need to understand fundamentally, in order for something to be on a credit report, it must be 100% accurate, 100% timely, and 100% verifiable. If it fails
Okay.
any one of those three tests, it needs to be removed from the credit report. The one that we see most frequently is the verifiable that folks put on the credit report. But then when we ask them for proof or for backup or for contracts or for statements, they're unable to provide those. So if it's not
Mhm.
verifiable, it needs to be taken off the report.
What are some side effects of having bad credit? And is it known fact that if you have bad credit, you may not be able to get a house? But are there social economic impacts for having bad credit?
Yeah, folks usually think of I can't get a loan or I can't get a good interest rate on a credit card if I have bad credit. And those things are true. But I think it's so much more than that. It's just even the access to money. You might not be able to get a personal line of credit or a home equity. If you own a house, you might not be able to get a home equity line of credit. It also affects your rates when it comes to homeowners insurance. It has a huge impact on homeowners insurance rates. People with better credit get better home insurance rates and save more money. It impacts car insurance rates as well. So it really is bad credit is a huge burden for people. And it's a pit that sometimes they can't get out of because it just creates this downward spiral of bad credit. Sitting down and really focusing on getting good credit opens up so many financial doors. It creates a better life for a person if they have a better financial resume to submit to the world.
So, credit repair is just a reaction. You're taking a post standpoint, like you're reacting to what has happened. Having good credit is being proactive. So, are there any recommendations that people can do in order to prevent or actually increase their credit profile?
I love the question because I think my answer might surprise you. Something that amazes me, maybe it won't surprise you as much as it surprises me, but here's the first step in answering your question. The first step for people to do is to look at their credit. It sounds so simple, but it is shocking how many people don't look at their credit. They either, I'm too busy, I don't know where to go to look, I don't care enough to look. I'll open the birthday card or something more fun and more pleasant before I'm going to open the bills. People bury their heads in the sand and they don't look at their credit. The first step in order to maintain good credit is actually look at your credit
Yes.
and see what's on there, see what's correct, what's maybe incorrect, and evaluate that credit. One of the things that we see here is there's a difference between a credit problem and a financial problem. So if you're coming in with all your credit cards maxed out, that's not a credit problem, that's a financial problem. And so that's the next thing you need to analyze is, do I have a credit problem or a financial problem? If all my credit cards are maxed out, that's something that is right in your face to fix. I'm not going to say it's easy to fix because I get it. Paying those off might take time, but you can certainly start working on paying those off once you've looked at your credit report, realize, okay, my balances are too high, and then pay those off. If there's other derogatory items, that's perhaps a different conversation.
First thing is to actually look at credit, take inventory of what's going on, and evaluate whether it's actually a credit problem versus a financial issue where you don't have enough money, or maybe there are unforeseen things that has happened that has caused you to rack up a large credit card bill.
Yes,
And taking a proactive approach, or at least try to address that first, because that's going to impact your credit.
correct.
Yeah. Beyond that, are there other things that folks can do?
Sure. It's determining what is the issue. Is it collections? Is it late payments? Is it too many trade lines with too high of balance? And that's the analysis that we do at Credit Repair Resources is we sit down
Okay.
and we review the credit report for a customer for free. And that's our first step is determining, is there anything on the credit report that we can help with?
When they sign up with your company, you will then evaluate their situation to determine whether it's a financial problem or a credit repair problem. Are there other steps or part of that process that you would mind sharing?
The first step is to do that free review and say, are
Yes.
you even a candidate for us? And we do decline some folks and say, either there's nothing we can help you with, but here's some things you can do on your own, like paying down credit cards. Sometimes it's more of a situation of if you are so underwater with your debts and your collections and everything. I'm not saying that bankruptcy is always the answer, but sometimes in life you do need to hit the reset button. And so
Okay.
we do refer folks sometimes to bankruptcy. If I've seen too many people spend too much time trying to dig their way and fight the good fight and dig their way out of debt, and 5 years down the road, they're no further ahead. If they would hit that reset button and get a fresh start and learn from their past mistakes, they'd be much better off in the long run. Sometimes we decline folks because in too bad a shape, you need to get a fresh start. Sometimes it's not bad enough for us. If it's only one or two things, maybe you can dispute it on your own and we'll guide you on that. So we have a sweet spot of if there's 3 to 30 items, usually that's in our sweet spot of where we think we can help clients.
I have to ask, you mentioned bankruptcy. There are folks I'm sure that would be afraid of the repercussions that may come from filing bankruptcy. What do you say to that?
I'm so glad you asked that because that is such a misconception out there. People think that, oh, if I file bankruptcy, I'm in credit jail for 7 to 10 years. And it's not true. We've actually taken clients that have filed bankruptcy, come to us 60 days after discharge. And then within a year of starting with us, we've got their scores back into the 700s. And now you can speak to lendability based on a bankruptcy better than I can, because there is certain lendability issues. Like you can't get an FHA loan for, I believe it's 2 years after bankruptcy. But so lendability is a different question. But to get your credit back into the 700s, yeah, hit that reset button, come back. You're not in financial jail. In fact, because you filed bankruptcy, you can't refile again for a number of years. So people are going to be a little more willing to lend to you and then build your credit so that once you're past that, whatever the limitations are for lending with 2 years for FHA, you'll be ready to go ahead and get that loan. Yes, a
Understood.
bankruptcy stays on the credit report for 10 years from the date of discharge. So it's going to be there. However, it's often the better course for the long-term success.
We have addressed the bankruptcy question because it's a burning question for a lot of folks. Now, what do you think makes your company different than the various credit repair companies that are out there?
I think there's a couple of things that sets us apart. Number one, we're attorney owned and operated. I don't represent our clients. However, you do have access to my knowledge base. I train all of our case managers based on my experience of litigating. And actually, our whole system is set up based on my litigation experience and my experience working on credit over the years. So you get the advantage of having an attorney-based company. We consider ourselves a concierge credit repair company. We're not the cheapest, and I'm okay with that because we have personal touch. We don't just say, okay, great, upload your disputes into our computer, and then we'll have our computer talk to the bureau's computer. That's not how we do it. We do phone calls. If you enroll with us, your initial call with your case manager is what we call your discovery call. And that
Okay.
discovery call can be 20 or 30 minutes long, where the case manager goes line by line through your credit report with you and asks you questions about it and tries to get you to remember what happened in this situation. We're looking for holes in the credit where we think, okay, maybe this one isn't timely. Maybe this has been redated. We see accounts that have been redated. Well, if it closed 10 years ago, it should not still be on your credit report, but they've since redated it time and time again. We do that personal discovery call with our clients so we can really find out what's going on. That's what I think sets us apart is we're willing to actually talk and engage with the clients in depth to help them on that path. And we create a personalized plan for every one of our customers because everybody's credit's different. And so we create a personalized plan based on that person's credit and where they're trying to get to help them get to their goal.
Some folks may say, why can't I do this myself? Can I just dispute these items on my own?
So a couple things on that. First of all, the answer is yes. You absolutely can dispute your credit on your own. I can also change my oil on my car on my own, but I know three things for sure. If I try and change, I'm a pretty handy person, but if I try to change my oil, here's the deal. It's going to take me a lot longer than it should. And number three, I've got maybe a 50% chance of doing it the correct way. That's why I hire an expert to change my oil. It's quicker, it's more accurate. There's a stat out there that says that 80% of the people that try to repair their own credit quit after the first round of dispute letters because it's very frustrating, it's very annoying, it's very confusing. And the bureaus, I don't want to say they do it on purpose, but they do it on purpose to keep it confusing. So that's why I think, can you do it on your own? You can, but you really should hire an expert because we do this all day, every day, and let us take the frustration for you. The other thing is we know all kinds of different statutes. The Fair Credit Reporting Act, we know the Fair Debt Collection Practices Act, we know statutes of limitations that we can use, but we know even more bizarre laws. I had a chance recently with a client to use, it used to be called the Soldiers and Sailors Act. I think they changed it to the Military Personnel Act, but I like the Soldiers and Sailors Act. That just sounds cooler to me. I had a chance on their credit report to use the Soldiers and Sailors Act. This person didn't realize that applied. And so if you're repairing your own credit, you can. You don't have to be an attorney. But man, having an expert in my corner that knows some obscure laws like the Soldiers and Sailors Act is really helpful to get you to success.
That makes sense. As a broker, a lot of folks could sell their houses on their own. But if you're following the NAR statistics for the past 10 years, that number's on a decline. And I think a lot of sellers believe technology is readily available. There's Zillow and all these other places. Therefore, I should be able to do this. But there are many things they're not ready for. But one thing for sure is when they get bombarded with buyers and the nuance surrounding how to deal with a buyer, how to get the buyer, whether they're approved or not approved, they're having to learn the process. For us, this is all we do. We know this like the back of our hands, but for them, if you don't have a full-time job, this is something you want to learn to do, great. But otherwise, you might want to just leave it to the professionals.
I think it's similar for your business as it is for mine, that a lot of times you only get one shot. If I get a ready, willing, and able buyer and I goof up that deal somehow because of my lack of knowledge, or I try and push them too far on the price and they get mad and they go away, I've lost that buyer and I don't think they're coming back. Well, very similar with credit repair. Under the Fair Credit Reporting Act, I can only dispute this thing one time. And if you dispute it multiple times, the bureaus can come back at you and say, we're not disputing that again because you already did. And B, they can come after you for fees, for their cost of having to process what they deem to be frivolous disputes. So you really only get one bite at that apple. And if you don't know how to do it professionally, then you lose that bite at the apple.
I've had buyers where they have a credit score, let's say it was 620, and they need to get to 680. Are there any tips or recommendation to boost your score, things that they could do that can have an immediate impact?
So immediate impact is a challenge because people ask us all the time, oh, can we expedite this? No, credit doesn't move that fast. So it's hard to expedite. But one of the things that they can do, like we talked about earlier, take a look at your credit report, okay, and see. There's the 30-10 rule when it comes to credit cards. And anytime you have a balance over 30% of your limit on a credit card, it's hurting your score. So take a look at your credit report and see what the balance versus the limit is on your credit cards. And if you are able to pay those down to 10%, 10% is the ideal balance to have on a credit card. Don't pay them off. Pay them down to 10%. 10% is better than 0%. I have seen people take credit cards from over 30%, bring them down to 10%. I've seen them get a 50, 60 point bump in their score just from that alone. The quickest fix, you have to wait for the next time that your credit card reports to the bureau. They only report to the bureau once a month. You can look at your credit report and try and get an idea of when that is. I wouldn't try and play the timing game. It never works. But you might have to wait 30 days for that to report to the bureaus, but then you should see a bump in your score from that. That's probably easiest tip I can give folks, is just look at the report and pay those down.
Would you recommend getting a credit increase to balance things out?
So the reason I'm going to say no to that is if you are trying to get a mortgage and you apply for a credit increase, they're going to do a hard pull on your credit report. While a hard pull on your credit report isn't going to have a huge impact on your score, the bigger concern is when you go into underwriting, they're going to see that you've been applying for credit. You got to be really careful. I know for business loans, I was talking to some business lenders And they were telling me that if you have more than 2 hard inquiries on your credit report in the past 12 months, that's all you're allowed. Number 3 automatically kicks you out of underwriting.
Here's an interesting question. Can you have too much credit? Is there such a thing?
Yes, there is. Having too many open credit cards, even if they all have zero balance, when you're going through a loan process and the underwriting process, that's going to make them really nervous. What if all of a sudden you go off the deep end and go and max out all those credit cards? That's going to put you in a real financial bind. So the bureaus from the credit scoring standpoint and lenders don't like to see a bunch of available credit for a person. The ideal number of credit cards to have on a credit report is actually 2. Now, if you have 5 or 6 or 10, that doesn't mean go out and close all of them except for 2. Don't go and close your credit cards, because there's another important factor in credit, and that is length of credit history. My barber once was cutting my hair, and he told me, we're talking credit, and he goes, "Oh yeah, I went out and closed all my credit cards last week." And I'm like, "Oh, my friend, why wouldn't you talk to me first? You just killed your credit score because your length of credit history went from whatever it was down to like next to 0 because you some of those old credit cards that you had for 20 years. Too much open credit will make lenders nervous."
Minimize the number of credit cards, but if you have long-standing relationship with credit card companies, you want to keep those in place and not close them. You hear folks that favor being financially responsible is not to use credit cards at all. What do you say to that?
In order to have credit, you need to use credit. So that's why the 30-10 rule says you need to carry a 10% balance. Carrying a 0 balance is a great financial decision. Carrying a 10% balance is a great credit decision. The other concern I have is people that think like that. Unfortunately, younger people tend to do this. I've got 2 daughters that are both in their mid-20s, and I talk to them about this regularly. But of course, I'm dad and I don't know anything, so they don't always listen. But I talk about debit card dangers. So people that don't want to use their credit cards, are worried about going into credit card debt, often will use their debit cards for regular purchases, whether it's the grocery store, the gas station, online, whatever it might be. My concern with that is a debit card gives you a lot less protection than does a credit card. So let's say that there's a fraudulent charge because you're using your debit card everywhere and somebody gets a hold of your numbers or whatever, and there's a fraudulent charge on your debit card for $500. Well, that $500, if they take that out of your account, and while the dispute is going on, that goes into an escrow account, that $500. It's not back in your bank account, so you don't have access to it. However, if that same fraud happens on my credit card, it is the bank's $500 that sits in escrow while the dispute gets worked out. So I'm not out that $500 while we're working out whatever that dispute might be. There's a lot less protection under a credit card if there is fraud. The credit card companies are allowed to charge you up to $50 of that fraud. Most of them charge you 0. Depending on when you report it on your debit card, you could be responsible for the entire amount of the fraud. So there are just so many more dangers of using a debit card. What I personally do is I use a credit card, and that credit card is at the same bank as my checking and my savings account. So I'll go and use a credit card every 2 weeks. I go in and I pay that credit card off. I do it every 2 weeks, so I never miss it. Now, if I were going for credit, I would leave a 10% balance on there, but I'm not looking for an extension of credit at this point. So I pay it off. Every 2 weeks, I pay off that credit card just by transferring the money from my checking or savings onto the credit card. That way I'm not going into any debt, but I'm also not putting myself at risk by using my debit card.
That's interesting that you brought up debit card versus credit card. I can tell you I have not used a debit card in almost 10 years now. They have direct access to your bank account. That was brought to my attention about a decade ago. I open bank accounts, they give me the card, I often cut them, or I just store them in my file cabinet. Whenever I go to the bank, they'll ask me, "Can we see your check card so we can access the bank account?" No, I don't have it. So they'll send you a text to verify that it's you. Last month, I went to a baseball game with the kids. And interestingly, I lost my American Express card at the game. A day or 2 later, I looked online and I have almost $500 of purchases, like $498. Somebody went on a shopping spree, got them some gears at the stadium. They bought food. They went to Dunkin' Donuts. They went to Foot Locker. I can't remember the last time I've been to Foot Locker. I mean, it's been maybe couple decades, if not longer. Because it was my American Express, I simply called them. They asked me some questions, and the cost to me is zero. Where had this been a check card, I would have been on the hook for probably $498.
That's correct. And while that dispute is worked out, you won't have access to that.
Assuming they work out in your favor.
I wish we
That's a
could
good one.
spread that word, especially to my daughters, but I wish we could spread that word to everybody. It shocks me what percentage of Americans, and I looked into it a while ago, and I don't remember the number off the top of my head, but it shocks me the number of Americans that use their debit card every day for everyday purchases and aren't aware of the risk involved with that.
What would you say to someone who's 17, 18 years old, just starting out in the world of finance, and in terms of maintaining their credit or improving their credit as an adult?
Yeah, coming out of high school or college, a lot of young folks don't have much in the way of credit, maybe just some student loan debt. So one of the first things they need to do is go and get a credit card. I tell them to go and apply for a standard credit card. If you go to creditcards.com or go to NerdWallet, you can search for cards for people that are new and trying to establish credit and get one of those. Hopefully you can avoid getting a secured credit card because obviously that ties up some of your money that's being held by the bank. Secured credit card is a fine option if you can't get a regular credit card. Go for a regular credit card. Worst case scenario, get a secured credit card, but then use it. That's the key, is use it. And the way I tell people to use it is this. In month one, go charge a tank of gas. So if you get a $300 credit card, go charge maybe $40 in gas on that credit card in month one. In month two, pay the minimum. Whatever the minimum is, pay the minimum. In month three, pay it off completely. Then in month four, go back to month one and charge another tank of gas. So it's a 3-month cycle. Charge a tank of gas, pay the minimum, pay it off. Charge a tank of gas, minimum, pay it off. If you keep going in that 3-month cycle, that will show the consistent, responsible use of credit. Those are the 3 words the credit bureaus give us to say this is how you establish credit, is the consistent, responsible use of credit. I know that a lot of credit cards, Capital One especially, is good about if you do 12 months of responsible credit, they'll bump your limit without even asking. They just see, okay, this person's been responsible for a year and the use of their card, we're going to move them from 300 up to 600.
How can landlord or investors leverage or benefit from the services that your company offers?
I think there's a couple of ways that they can benefit. When I'm in those real estate investor circles, what I hear them say a lot is that the best person to sell your house to is your tenant because they know the house, they've been there for a while, they've taken care of it, maybe they've grown to love it. If you're looking to sell your house, sell it to your tenant. A lot of times, however, tenants don't have the credit to buy the house. So we can help, obviously, get that tenant of yours credit ready so down the road they can buy your house. The other way I think we can help folks is just by helping their tenants, whether you're looking to sell the property or not. If we can help your tenant have a better financial life, it gives them access to funds. It gives them more financial flexibility so that if something happens, they're not drowning in debt. They've got their financial ducks in a row. And if they lose their job or something like that, instead of them not paying their rent to you, they have access to funds. Maybe they have a personal line or could get a personal line of credit to get them through being out of a job or being out on medical leave where they're not getting paid their normal salary or something. So just having that financial flexibility is very helpful to your tenants. And the last thing I'll mention is if you have tenants that you refer to us that get that credit help, it sets you apart from other landlords. It shows you care. You're not just about the numbers. If you can help your tenants with getting better credit and getting their financial life more in order, I think it shows that you care. I think that creates a lot of loyalty, a lot of goodwill. I think they would refer other people to you because you actually care about them as a person.
Yes. Indeed. We have clients that work with us that are doing, that these are landlords, obviously, or sellers that sell homes on lease options. I would imagine the buyers or prospective buyer tenants would be a good fit.
That's a huge market for us. Yeah. If they're doing any kind of leasing it to own it down the road, that's something that we can work with to help them fix their credit because It's not an overnight fix. Folks that come to us and go, and I know these ads are out there on TikTok and other social media where you fix your credit in 30 days. More than likely, you're either lying or you're doing something illegal. It typically takes 5 or 6 months in our system to get a client's credit back to where they might be in a lendable situation. So it's not a quick fix, but those lease options are great for us.
Understood. Can you talk to us about what is a credit freeze or is it credit lock?
There's a credit freeze, a credit lock, and a fraud alert. A credit freeze is where you freeze your credit, right? It is locked down. Nobody can look at your credit. Nobody can pull your credit. You do that by contacting each of the 3 credit bureaus, and they give you the secret code. The problem with the credit freeze is you have to unlock your credit if you want to do anything, and that can be a headache, and people tend to forget their little secret codes and that kind of stuff. Freezing your credit is easy. Unfreezing your credit, not as easy. So that's a credit freeze. A credit lock is just where you pay a third party to put a credit freeze on for you. A fraud alert is where there is just an alert on your credit. So lenders can pull your credit and can look at your credit. However, because that fraud alert is there, it creates a higher burden for them to check your ID, confirm you are who you say you are. So they cannot open an account for you unless they confirm your identity through a couple of different methods. So what I always tell folks is the only time I would use a credit freeze is if I'm in the middle of an active fraud. So let's say you lost your American Express card. If you lost your whole wallet and it had your driver's license, and I don't think people really carry their social security card around them, but let's pretend you did, and somebody had access to that, now all of a sudden they have access to your world and they have huge access to your credit and your credit report. If that were the case, credit freeze right away, locks it down. They can't do anything to mess with you. If you get a notice, like I got a notice a few years ago from AT&T that they had a security breach and that my information was out there on the dark web or what have you now because of their security breach, I did a fraud alert. It's unlikely anything's going to happen. I haven't heard anything come up. I have a credit monitoring service that I use and nothing's ever come up. But just to give yourself that kind of peace of mind so you can sleep at night, I would do a fraud alert in that situation, but only a credit freeze in an extreme situation.
Credit lock is being done by a third party. Credit freeze, you can do yourself, but you have to contact all 3 credit bureaus.
Correct.
And then there's the fraud alert, which
Fraud
you can
alert.
do yourself as well.
Yep. You have to contact all 3 bureaus. It
Yes.
is easier to remove than a freeze, and it expires after a year anyway. Credit freeze lasts until you take it off. A
Right.
fraud alert lasts for 1 year. You can renew it as many times as you would like, but it only lasts for 1 year. Credit freeze and a fraud alert are free. Bureaus are not allowed to charge for those. If you do it directly with the bureaus, it is free of charge.
As we run ads and rent properties to prospective tenants, we've had some tenants, when we attempted to do a background check, we couldn't get the report. Come to find out, they actually had a freeze on their credit and forgot about it completely. I'm sure if they remembered, they would have removed the freeze before going out to apply for places to rent, but they did not, which delayed the screening process.
Yes, it delays the process, and then you got to figure out how to unfreeze it, and heaven forbid it takes you a long time to figure out how to unfreeze it. Online to look at my own credit report, I went to a different site to look at it. They ask you a bunch of tough questions. They ask you about a car you owned 10 years ago. They ask some tough questions. It can be a real challenge to get a credit freeze removed. I was at Best Buy a year-ish ago, and I was making some purchases. And I had my credit card, and I was all ready to buy it with my credit card, but then on the little screen flashed a interest-free offer. And I'm like, oh, what is this interest-free offer? I'll always use your money instead of mine. It's interest-free. And he said, 24 months interest-free. You just got to do minimal payments every month. I'm like, oh, yeah, I'll take that for sure. It was a credit application. It took me just a couple minutes to do the credit application. But if my credit were locked, I would not have been able to get that Best Buy card and use their money for free for 2 years.
So you need to think ahead if you have frozen your credit, if you're planning to make a purchase or apply for credit of any sort, and get ahead of it before attempting to make that purchase.
I think it's even more challenging than that in the sense that I had absolutely no intent of getting a Best Buy card that day. I had
Right.
literally had my credit card out. I was ready to tap or swipe or whatever, but then that offer came up. So that's why I say a credit freeze, honestly, is not worth the headache unless you're in an active fraud situation. It just is too much of a headache. because you never know when you're going to get a great offer and you're like, oh yeah, run my credit.
So would the fraud alert be if you're, let's say you're paranoid, because, and you mentioned AT&T. I've had AT&T. I've had various credit card companies or financing companies send me emails or letters mentioning that there's a brief of some sorts. But if freezing your credit isn't the best way to go, what would you recommend?
If you get one of those notices and it helps you sleep better at night, I would say fraud alert would be the way to go. It is easier to put on and to remove, and they can still look at your credit. They just need more ID from you when they actually go to open an account. And I think in your case where you're pulling credit on potential tenants, I think it wouldn't cause any delays or any headaches at all.
Understood.
So fraud alert, I think, is sufficient in those things. But if you're in neither of those cases where you're not in an active fraud and you haven't received that notice, you put the fraud alert on, you let it expire after a year. If nothing happens, if something's going to happen, it's going to happen within the first year. So if nothing happens within the first year, I just let it expire and I'm like, I'm fine.
Understood. So you mentioned your company and your services, and you referenced you guys are not the cheapest. Are you open to sharing what your pricing structure is for anyone
Sure.
who's interested?
Sure. This is our current price structure. We do have periodic price increases, no more than once a year, usually in January. The typical client pays an average of about $1,100. It is illegal for a credit repair company to charge in advance. So if you're going to a credit repair company and they say it'll be $1,500 up front, let them know that's a breach of the law. We charge on a monthly basis. We charge in arrears. We'll do that discovery call with you. And once that discovery call is done, that's our first suite of services. We bill your credit card after the end of that phone call. Then we do another month's worth of service for you, and we bill you after we do that work. So with us, you can cancel any time. The typical price, we have different products, but the standard price is usually around $400 to get started, and then about $170 per month thereafter.
Are you opposed to receiving it? Let's say a landlord, for example, that's interested in getting that service for their tenant.
So we've had that situation come up, and here's what I would encourage. Our clients need to have some skin in the game.
Okay.
It's not a situation where I give the oil change analogy, right? When I take my car in for an oil change, drop it off, and they call me when it's done, and I come get it. When you come to us, it's more like going to a personal trainer. You're an active participant in the process. We need you to be engaged. We'll coach you and walk you through. It's not going to be a huge headache for you, but you need to be an active participant. We have found historically when folks have it paid for them, they are less engaged in the process because they've got no skin in the game. So here's what we encourage folks to do. And this applies to landlords. This applies to mortgage companies. We encourage you to have the client go through the process. Once they successfully complete our process and come back to you, you can then reimburse them, any amount that you choose to do. I know some mortgage companies will say, we'll knock $500 off your closing charges if you go through credit repair. So once you've successfully completed that, you're coming to us for your loan. We knock $500 off, pays for close to half of your credit repair. So you can do something similar like that on the back end as opposed to doing it on the front end, because you also want them incentivized to get through the process. You don't want to waste your money investing in them. I'm going to quit this process halfway through.
How can folks get in touch with you?
So you can visit our website. It is crr760.com. That's our website, crr760.com. Or you can call us at 216-591-1000. Those are the best ways to reach us, and we'd be happy to talk with you if you just have credit questions. If you can't get a copy of your credit report, that's okay. We have some preferred vendors that we would send you to so that you can go to them and pull your credit. But we don't have a permissible purpose to pull credit, so we can't pull credit for our clients. They have to go to a site and pull it. And call us first, because there are some sites that don't give you the data that we need to assess your credit. So let us send you to one of our preferred vendors.
If you're thinking about buying and your credit isn't where it needs to be, how soon should they contact you?
It's the same thing we've always heard about. When should you plant a tree? 10 years ago. You want a tree now?
Right.
10 years ago. With your credit, it's not quite 10 years ago. It's not that bad. If you want to buy a house right now, then you should have called us 6 months ago. Typically 6 months or even a little bit more in advance is enough for us to get you into the process.
Understood. Be proactive.
Yes.
Let me tell you a story. since we went into piercing the coverage. I had a lady a few years back. We had a property. We were doing a lease option. She came to us, wanted to do a lease option. We wanted $5,000 to start the lease option. She said, no problem. I got it. The backstory is she lost her house in foreclosure. And she needed to wait a couple of years to be financeable again. She had the income. She was self-employed. And she wanted to become a homeowner again. She had experience of maintaining a house, which was far bigger than the one she was going to get from us. She moved in. This lady was phenomenal. Would plant flowers. She wanted to get our approval to paint the exterior of the house. The list of things she was doing to the house was phenomenal. I could barely recognize the house after a few months of her living there. She was fantastic. Before she moved in, she gave us 11 checks to deposit every month. I'll talk to you in 12 months. I'm like, wow, this is great. It just can't get any better. About 4 to 5 months in, she called and she is crying. She is screaming. She said, they took my money. They took my money. I said, what money? What are you talking about? She said, they took the money. They took the money. I said, what money? She said, the money that was in the bank. She said, no, the bank took it. What are you talking about? She had a business, but she was paying her mortgage payment directly from the LLC. Her personal expenses. So the check she gave us came from the LLC. She was operating her business and depositing the money into the LLC and paying all her personal expenses out of the LLC. So when she lost her house to foreclosure, the bank got a judgment and they attached her bank account and cleaned it out and left her with $300. She had, I think, in excess of $20-some thousand in the bank because she was not running her LLC properly.
Seen that a bunch. And
so
people,
this happened.
Yep.
And it was fascinating to watch her relationship with us after she lost the money. She fell behind on the rent. It just completely messed her up mentally. She just could not recover from it. Almost evicted. She eventually vacated the property. It was a mess. This could have been avoided had she been running her business properly.
You have to observe the corporate formalities is the legal phrase for it. And when you don't, and I see people all the time, just they treat it like it's my personal account. And like you said, pay your mortgage out of your business, write a check from your business to yourself, and then from yourself to the mortgage.
She didn't know, or maybe she ignored it, but it happened. And this is real life, from a phenomenal tenant, a prospective buyer, to someone that could no longer maintain the property.
Very sad. Very sad. And avoidable, which is even more sad.
Thank you very much.
My pleasure. I enjoyed talking with you.